Welcome and thank you for joining today's live webcast, where Elval Halkor will present and discuss its fiscal 2024 financial results. We would also like to inform you that this call is being recorded. Today's call will be presented by Angelos Giazitzoglou, Deputy Group Chief Financial Officer, and Dimitrios Theodorakatos, Group Consolidation and Investor Relations Manager. Mr. Theodorakatos, you may now begin.
Thank you. Good afternoon, everyone. Thank you for joining us in our presentation of our 2024 financial results. Me and Mr. Giazitzoglou will provide you a comprehensive overview of our performance, followed by a short and brief introduction for our business. After the end of the presentation, we will conduct a Q&A session where you are welcome to ask any questions regarding our group and our performance. It should be noted that our audited financial results and the respective CSRD report will be published on 14th of April 2025. Now, let's move on to the presentation and the key highlights for the fiscal year 2024. Despite the subdued demand and the challenging economic environment in most segments of the economy, our group managed to increase its sales volume to 585,000 tons, boosted by the increased production capacity of the aluminum rolling division. Our profitability remains strong for another consecutive year to 238 million euros. This, combined with the successful management of our working capital and the reduced investments, contributed to solid operating cash flows and the further reduction into our net debt to 643 million euros. Furthermore, our group managed to successfully achieve another medium-term target of a net debt to adjusted EBITDA ratio below 3, with a year-on-year improvement of 0.7 basis points, bringing the ratio to 2.7. Now, I will turn the floor over to Mr. Giazitzoglou for his comments and to provide further insights for our performance. Angelo?
Thank you, Dimitris. I would like to continue by reviewing some charts that depict the environment in which we operated in 2024. Metal prices on the LME increased during the year. Aluminum had an upturn 7.4%, copper 7.8%, and zinc 4.9%. This increase posed a challenge to our efforts to reduce working capital. Natural gas prices had a downtrend compared to those in 2023, supporting lower production costs. Inflation in Europe dropped to 2.4% by year-end. Reduced energy prices played an important role to this improvement. And as inflation eased, interest rates were reduced, with the fourth and final cut occurring in December. On our next slide, we have our cost breakdown, excluding, of course, metal costs. In slow-moving markets with price pressures, actions are necessary to keep production costs low. Cost control and reduction were critical in our efforts to increase profitability. In 2024, energy costs were significantly lower compared to the previous year, primarily driven by lower prices. As a percentage of total costs, energy expenses dropped from 17% to 12%. Moving on to slide 5 with our volumes. In the fourth quarter of 2024, aluminum segment volumes were lower compared to the previous 3 quarters. However, at 100,000 tons, they stood higher than the levels seen in previous years. Rigid packaging saw strong growth with a double-digit increase compared to 2023, while flexible packaging, after a weaker start in 2024, made a significant recovery and ended with higher volumes than the previous year. Other markets showed mixed performance across different product categories. The copper segment remained at the same level as the previous quarter, with no significant changes in volumes for 23. Meanwhile, demand in markets such as construction and industrial applications remained subdued until the end of 24. Throughout the year, we successfully increased sale volumes in specific product categories, gaining market share for our core products. Now, about the adjusted EBITDA evolution per quarter. In the final quarter, markets showed stability compared to previous quarters across almost all markets. Starting this time with the copper segment, the last quarter appears weaker than the previous ones, however, with higher profitability compared to previous years. Price pressures and maintenance expenses were the main drivers of this. In the aluminum segment, in the fourth quarter experienced a slight correction compared to strong third quarter. However, profitability remained resilient at 39 million euros. Figures for each segment at the company level in total will be presented on following slides. On the next slide, we have the adjusted EBITDA per ton in year-end. In the aluminum segment, the performance in fourth quarter was slightly lower than the previous, but remained significantly higher than the first two quarters. This resulted in an annual adjusted EBITDA of 335 euros per ton. I want to reiterate that in the first quarter of 23, the market downtrend had not yet affected flexible packaging, and profitability remained particularly high. However, in 24, the company gradually increased both quantities and profitability in this market. And now the copper segment maintained strong operational profitability through the end of the year, closing at 578 euros per ton, 6% higher than the previous year. Despite international economic pressures, the segment showed resilience, particularly in the construction, automotive, and industrial application sectors. The main pillars of our effort are the development of innovative, high-value-added products and the optimization of our industrial production to give long-term success. On the next slide, we have an analysis of our products per market. 24 was a year of weak demand, with most markets moving downwards. Construction, automotive, and industrial applications were the markets that suffered the most. The only resilient market remained packaging. In the aluminum segment, the recovery of flexible packaging from the second quarter onwards boosted quantities and reached 60% of total revenues for 24. All other markets had minor changes. In the copper segment, the changes between markets were small, with no major quota variation. Moving to geographical distribution, the company sales reached more than 19 countries worldwide, with Europe remaining the core market. Germany, Italy, Poland, and France are the predominant markets. This did not change in 24 for both segments, with only minor variations from the previous year. The export orientation of the company remains strong for another year. Moving on to financial results. The aluminum segment achieved strong sale volumes, while the copper segment saw a slight decline. Overall, the company performed very well, with sales to 585,000 tons compared to 561,000 tons in the previous year. All these achievements occurred in a weak market environment, which remained unchanged in the last quarter of the year. Despite the stable market conditions, in the last quarter, the company's operational profitability remained strong at 238 million euros, down only 0.8% than the previous year. Turnover amounted to 3.4 billion euros in 24, up 4.4% compared to 3.3 billion euros in 23. Drivers to that were the increased sale volumes and the elevated metal price that we mentioned before. The elevated quantity of aluminum products, combined with the lower LME, prevented this number from being even higher. The positive metal result of 6 million euro further boosted EBITDA to 243 million euro, much higher than the previous year, almost 38%. Moving to some more financial figures, we see that strong performance continued in fourth quarter with earnings before interest and taxes amounting to 177 million euros, up 71% than 23. We were able to achieve this by leveraging increased capacity, optimizing the product mix, and implementing cost reduction strategies. At the same time, we managed to gain market share and enhance our position with high added value products. In 24, our adjusted EBIT surpassed 23 by 3.2%, closing at 171 million euros. Finally, profit before taxes amounting to 126 million euros, 193.3% increase from 23. A key driver of this profitability was financial cost, which dropped to 45 million euros from 53 million euros in 23. Moving to the next slide, let's see how we achieved this strong EBD result. Despite adverse market conditions and the continued geopolitical tensions, the company boosted profits before taxes by 83 million euros to 126 million. Increased sale volumes, mainly in the packaging sector, resulted in an increase of profitability by 17 million. Price pressures were offset by lower production costs. Increased sales, general and administrative expenses by 7 million euros. A significant impact from the reduction of debt combined with the interest rate cuts led to lower financing costs by 8 million. We had the positive effect from an investment valuation. And finally, the positive metal result, which stood at 54 million euros, boosted profits for 24 to 126 million euros. Let's proceed to the cash flow bridge. The strong performance in profitability continued in the fourth quarter, reaching 243 million. Interest payments to 48 million. Working capital improved by 82 million. Income tax paid at 12 million. Investments at 75 million. Long-term loans repayments amounted to 141 million, 66 million of them being early repayments. And dividend at 15 million. As a result, we created a robust year-end cash position of 80 million euros. Next slide is about working capital and net debt. The successful management of working capital throughout 24 led to a reduction to 538 million euros, an 82 million euro or 13% decrease from 23. As a percentage of sales, working capital stood at 16%, down from 19% in 23. Net debt decreased by 170 million, driven by strong free cash flows, successful working capital management, and a slowdown in investments. The company has also taken necessary actions to mitigate its exposure to high reference interest rates, securing 66% of total debt at a fixed rate by year end. And let's close with our CapEx. 2024 followed a year of completion of major investments in the aluminum segment. These investments allowed us to expand our capacity and drive sales growth. In the copper segment, investment expenses maintained close to those of the previous year. Meanwhile, the investment program at Sofia continues successfully and is expected to enhance the company's position in a competitive market. Now, before we close and pass to our Q&A session, let's summarize. 24, the company showed resilience despite challenging market conditions and managed to achieve increased sale quantities by 4.3%. Despite subdued demand and pressure in prices, we delivered a robust profitability with earnings before taxes stood at 126 million euros, up 193.3%. Successful management of working capital resulted in a reduction of 13% from 23, down 82 million euros. And last, net debt reduced to strong operating cash flows and a slowdown in investments to 643 million, down 170 million euros. Thank you for your attention, and now we can proceed to the Q&A session. We would like to inform you that you can place your questions in two different ways, either by raising your hand or by submitting it on the Q&A tab. You can find both options at the bottom of the screen. I see that we have 3 questions in the Q&A, on the Q&A tab. First question from Mr. Nestor Katsios. Could you please comment on press reports regarding your potential involvement with the defense sector and the Rearm Europe program? For ElvalHalcor, at this moment, this market is a small part of our operations. Approximately 1% of our total sales are heading to this industry. But of course, it is something that we are very interested in, and we are monitoring all the developments, especially after the announcements from Europe that they're going to spend 800 billion euros in this industry. We have the capacity, and if we see the opportunities, of course, we will capitalize on them. Next question from Maria Karayanaki. Good evening and congratulations on your good results. From December 24, China has stopped their tax rebate policy on copper and aluminum product exports. How do you expect this to affect your sales in 25, positively or negatively? Yes, this was something that has been announced in 24. Of course, with all this new situation with tariffs from US and all these retaliatory movements that we're going to expect, probably this is going to be something positive for us, because the products from China are going to be more expensive. So we expect to have a positive impact from this situation. Another question from Mr. Karanikas. Hello, can you please comment on the potential impact from the US tariffs? Yes, the big issue of these days. Our presence in US is approximately around 8% of our total sales. What we have right now is companies from US already announced that they are increasing their prices in US. That means that they're trying to they're expecting that we will continue to export to US, because the domestic capacity is not enough to meet the needs for local industries. So we don't expect to have any negative impact, at least for now. Our clients, our customers are continue placing their orders, and what we think that it will happen eventually is all this increased cost to go to the final consumers in US. So yes, for the time being, we don't have any negative impact from these tariffs. Mr. Aposporis is asking about the outlook of 25 concerning the tariffs. I think that I already answered this question. We don't expect, at least for 25, to see any significant changes in our sales heading to US, because, as I said before, local industries don't have, at least now, the capacity to meet the needs of their customers. So for 25, we expect to have business as usual. Mr. Thomas Renaud, could you please comment on your CapEx plan for the coming years? Yes, we already said that we completed our big investment plan in 23 in aluminum segment with the new cold rolling mill and the new lathering line. We were heading to increase our capacities in beverage market. We succeeded in that. And we said that for the time being, and that's why in 24 we see that you saw that we have lower capex. This is the plan for 25 also. We are expecting to see how the markets will evolve. We're expecting to see how tariffs or anything other will change, or geopolitical tensions in Europe, and how will impact the markets. So we don't have any certain plans for 25. That's why we have budgeted a capex around the numbers of 24, a little bit higher, but no, we don't have any special investment for 25. Maria Karayanaki again, the company has more than doubled the dividend for this year, distributing 30% of EPS for 24. Does this signify a change in your dividend policy? Should the financial condition allow it, or it is one-off? I think that we have already said in the past that our goal, in order to increase our dividend, is to reach our net debt to adjusted EBITDA ratio around 3. We achieved in 24 to lower even more this ratio. We succeed to have a 2.7, and because we have strong profitability and we generated enough cash to give us the opportunity to return this profitability to our shareholders. So it's a decision that we hope that we continue to take it in the future, having similar results. And one last question from Mr. Kalogeropoulos. Any comments so far on volumes for 25, and how much more improvement we can see on the working capital management, dividend policy ahead? You know that we don't give any guidance for the future. We are expecting to see a similar market condition that as we had in 24. We will keep trying to gain some market share again, and if we have any opportunity to increase quantities, of course we will try to achieve it. About working capital, yes, probably to sustain this level of working capital in 25 will be more difficult than it was in 24, because we see that the LME prices are going up, and this will affect our working capital. But we will try to keep monitoring our inventories and keep them in levels that will allow us to decrease further our working capital. And of course, we will keep trying to push our customers and our suppliers to either low or increase our days of our payments or of our receivables. So yes, it will be a difficult task, but we believe that at the end of the year, we will have a positive effect in working capital also. Maria Karyanaki again, one last question, please. How do you expect the possible end of the war in Ukraine and lifting of sanctions on Russian aluminum affect the company's outlook for 25? I think that anything that will happen in this direction concerning the war, it's going to be a positive. It's going to be positive outlook for every company and also for ElvalHalcor. We expect to see, let's say, lower prices in energy. We expect to see lower prices and even bigger supplies from aluminium from Russia. We have to say that Russia was one of our biggest suppliers in aluminium in the past. So I think, yes, that anything good news from Ukraine is going to be a positive for the company. I see no other question, at least written. I don't know if we have any other. I don't see any raised hands. Okay, so thank you very much, everyone, for being here with us today. Thank you for your questions also. And looking forward to seeing you again in our next webcast for the first quarter of 25. Good afternoon to everyone. Are we okay? Can we leave now?
You are in